Good morning all. In the last class we have discussed about the foreign exchange market and also about the FERA and FEMA we have discussed. So in the today's class we shall discuss about the what will be the operations of the foreign exchange market. Operations are nothing but the transactions, how it will be going on under the foreign exchange market. What different kinds of markets are going to be there in the existence of foreign exchange market, that we shall discuss in the today's class. And also who are the dealers are there in the foreign exchange market also we shall cover in this today's class. So under the foreign exchange market there are so many different kinds of the transactions are going to be performing by the so many different participants. So those market transactions are going to be considered as a spot market will be there, future market will be there, then there is a option market, the swaps market, like that. There are so many different kinds of the transactions which we can see in under the foreign exchange market. So under that, the first one, spot market. The spot market will be considered in the name of current market. So under the foreign exchange market there is a spot transactions which will be going on, will be considered in the name of spot market. So here under the spot market the foreign exchange is going to be done with the considering of the exchange value or the exchange of currencies will be there in the market to the spot price. What will be the current prices are going to be prevailed in the market, in the same prices there is a transactions between the one country currency with another country currency which will be going on, known as a spot transaction, or it is a spot market. So for example, in the today's market there is the Indian rupee will be having with the exchange of dollar will be $1 is equal to 72 rupees will be there, means so that will be the spot market. If you are making your transaction at the today's rate or the today's price for your conduct of transaction, that is known in the name of spot market. Here the principle of spot market will be, the spot market is daily nature will be there and it does not trade in the future deliveries. So under the spot market it will be having the daily transaction. So today's transactions will be make it end up with the rate of exchange only. So that will be the nature of the spot market. So there is no any future deliveries will be there. You should be having your buying and selling transactions in the today's market only with the rate which are prevailing in the market. So that is the principle of spot market. Then the spot rate of exchange is that rate which happens to prevail at the time when the transactions are incurred. At what time the transactions are going to be performing, at that period what will be the prices will be there between the currency exchange, that is only you need to make it considered for your conduct of transaction. So that is a principle of spot market. So because in the foreign exchange market there is a every hour to hour there is a fluctuations will be going on in the foreign exchange rate. For that reason you need to be come across with a very much spot period, means very much current period for your conduct of transaction we can see under this spot market. So for example, at the today's prices or the rate between the dollar and the Indian rupee at 8 am what will be there, so it is not there at the same at present if you are going to be looking. So slightly there is a somewhat changes which will be going on under the rate fluctuations we can see under the foreign exchange market. So that we can see under the spot market will be that where there is a rate will be happens, so prevailed in the time period, at what time period you are going to be conducting your transaction, at the same period rate is going to be considered for your conduct of market activities. So that will be considered in the name of spot market. So this is the principle of spot market. So in this way there is a spot market will be having their conduct of transactions in the foreign exchange market. The other type of the market in the foreign exchange market will be forward market. So under the foreign exchange the forward market will be considered, in which handles there is a transactions of a foreign exchange will be made for the future delivery period. Here there is some contracts are going to be made it to conduct of your all the transactions or the delivery of your currencies as for the future period. So such a type of the transaction we can consider in the name of forward market. Here the transactions are not having the delivery at the spot or at the current period. It will be having the future deliveries for making conduct of all those the contract which will be there under the forward transaction. So the delivery period will be in the future period, and the transactions are going to be come across with the term of agreement. So that type of the market transaction which will be known in the name of forward market. Here the foreign exchange rates are going to be also determined as in a differentiated manner. So that price will be known in the name of forward price. Here there is the transactions are going to be having the different price than the spot price. So such a price will be known in the name of forward price. The principle of this forward market is it only caters the forward transaction, in the sense, so there is a transactions are going to be done only for the future period. So there is a no spot delivery of your transactions will be there under the forward market. So, and even then under the forward market, it determines the forward exchange rate at which forward transactions are to be honored. So in the future period, at what rate you can be having your transaction can be determined under the contract now itself. So such a type of the transactions will be known in the name of forward transaction or the forward market. So which will be under the derivatives you have been studied about the forward market. Same thing will be there under the foreign exchange market also. There is a forward market will be having its existence. So this will be the other type of the operational or the transaction which will be going on under the foreign exchange market. We have come across with the transaction of spot market transaction, and there is a forward market transaction. Still there is a other type of the transactions will be there under the foreign exchange market. So under that we can see even the future market transactions will be there. The future market transactions means here the exchange of currencies are going to be involved with future delivery and the payment of the rate of exchange. What will be the rate of exchange will be there, that should be in related with the future rate. It should not be in the spot rate, it should be considered with the future rate of exchange what will be prevailed in the market. So the exchange of your currencies are going to be also in the future period. Your exchange of currencies are also going to be in the future period which has been already predetermined. So such a type of the transactions which will be known in the name of future market transaction. The Forex market is going to be known as a future one. So there is uncertainties which will be occurring in the foreign exchange market at a higher level in the future period. For that reason there is a future market is going to be considered as that, where there is a rate of exchanges are going to be as in the predetermined manner. So for example, if you are going to be making the any of the import and export activities, if you have been having the payment in the future period, you should be come across with the future market transaction with having the predetermination of the rate of exchange as under the agreement. So such type of the transactions which will be known in the name of future market transaction. Here the buyer is going to be get some to the some extent of the sum of the production. If you have, for example, if you have been imported some of the goods from the America, you need to make the payment. May you can come across with that in the future period there is a exchange rate between the dollar and the rupee will be goes on increases. For that reason may you can enter into the future market with having the future the predetermined rate of exchange. So by that you can be having the sum of the protection in regarded with the uncertainties occurring in the foreign exchange market. Such a type of the transactions which we can be considered in the name of future market. Then the other type of the market operations which will be going on under the foreign exchange markets will be the options, the futures and the swaps and the arbitrage. So here there is a options, already you have studied in detail about the options. So options are nothing but as a contract. So those are in the form of contract. The holder is not bound to buy, but he is going to be having the right. There is a no obligation will be there. There is a only right will be there with the holder of the contract. So either he will be having the right to buy or right to sell the specified asset which are going to be called as an underlined asset. So the specified asset which are the quantity at the predetermined price are going to be made it transacted under the options. Here there is a no obligation will be there, only there is a buyer is having option buyer is having the right to make buy or right to make sell of any of the any of the foreign exchange or any of the currencies will be there with the foreign exchange market. So in the sense, under the options, there is a currencies are going to be considered with the exchange as with the predetermined prices. So through that, the specific future, what should be the uncertainties will be there, that can be made it avoided, which is going to be making you occurrence of the losses. So through the option contract, if it is favorable, you can be go and make it access. If there is a unfavorability will be there, means there is a no obligation will be there, you can make it cancel. So for that, there is only some amount of option premium you need to make your payment. So such a type of the transactions which will be going on under the options market also. So options are not having the existence of particular market. So these are only the term of contracts. Through that contract, you can be the holder of some of the bondings, as like you will be having the right to make purchase or right to make sell of any type of the currencies, so or the assets, underlined assets, as with the predetermined prices. So such type of the transactions are also we can see under the foreign exchange market. Then already we have discussed about the future market. The same thing will be there here also. The future contracts are going to be considered as a quantity of an asset which will be having the date of execution or execution and price of the contract fixed and the standardized for the future period. So what will be the rate of exchange will be there for the future period, that has been determined as in before. So that will be term of operation which will be going on under the futures market. Then even other type of the operations which will be going on under the foreign exchange market will be in the name of swaps. So mainly there is a foreign exchange market will be having the dealings in regarded with the swaps. So when you would like to make the conduct of any investment activities in any of the other country, there is a problem will be there, because of in that economy there is the change of currency will be there. If you are an investor who is having the holding of Indian rupee, if you would like to make investment in America, means you cannot make that investment through the Indian rupee. You will be needed to make your investment in the, so America means you will be needed of the dollar. So meanwhile, there is a swap is going to be making such a type of the things of investment activities under the transaction. Here the swaps are those usually commercial banks which are going to be adopting as the swap contracts. So if they perform forward exchange business operations, here they sell off a particular currency in the spot market to buy the same currency in the forward market. The transactions which will be going on, the buying will be in the one market and the selling will be in the another market, will be making the somewhat returns for the making investment activities. Such a type of the commercial activities which will be going on under the swap. So there is a interest rate swaps will be there, currency swaps will be there. So rather there is the what will be the currency, the direct currency exchange will not be done to make conduct of your some of the investment activities. So such a type of the transactions which we can be seen under the swap. So as in such a manner, the swap will be the other type of the operations or the some of the performance which will be going on under the foreign exchange market. Then the other operations will be under the foreign exchange market is arbitrage. So the arbitrage will be considered as rigorous buying and selling of different currencies in the forex market to fetch the gain out of such transactions are to be called as a arbitrage. So mainly arbitrage are those who are going to be making their stretch of their gain for by considering there is a differences between the rate of exchange in one market to the another market. There is a somewhat slight differences will be there in the rate of exchange about any of the two currency. Those are going to be stretched with having the accessibility of the gains under the some of the transactions which will be known as arbitrage. So for example, in the one market, the exchange rate between the Indian rupee and the dollar will be the different than the another market, means the arbitrager he will make it by where there is a lower level prices will be there, and he will make it sell where there is a higher rate of exchanges will be there. Through this he will be having the gains within a shorter period. So within a fraction of minute they will be making conduct of these type of the transactions in the foreign exchange market, such a type of the transactions which will be known in the name of arbitrage. For example, if in the New York Forex market, so there is a Indian rupee and the Indian dollar will be having, Indian rupee and the American dollar will be having the exchange rate will be at a $1 is equal to 72 rupees. If the Indian Forex market, if there is a same dollar and the Indian rupee exchange rate will be, the $1 is equal to 72 rupees 50 paise, means 72.50 will be there. So then under the arbitrage transaction, in the New York he will make it buy of dollar, and in the India he will make it sell of the dollar. So that will be making the some of the gainful things for the arbitrager, who is known as a arbitrager. He is conducting all the arbitrager transactions. So such a type of the operational things will be going on under the foreign exchange market at a very much higher level quantity. So through that they are going to be having the more and more the gainful things under their transactions. So that will be the other type of the operations or the transactions which will be going on under the forex market. So the other concept is foreign exchange market participants will be there.